Hey, welcome to Dow Stock Talk, where I talk about topics relating to investing and finance, but more specifically, the stock market. Now, in this video, I'll be going over what to look for in growth stocks. Alright, so in this video, I'll be going over what to look for in growth stocks, briefly explaining what is growth stocks, what drives the price of growth stocks, and what are some characteristics that you should look for when you're investing in growth stocks. But before we get started, make sure you smash the like button because it helps the YouTube algorithm, it helps YouTube notice quality content, and help my videos reach a broader audience. And also, I just wanted to mention, if you're a big stock fan, make sure you check out my store, Wall Street Stock Apparel, where I make all different types of custom finance and investing shirts. Now, let's jump straight into the topic. Well, what is growth stock? Growth stocks are companies that is expected to grow much faster than the industry, or I would like to call it the overall market. So these are companies who has rapid growth. So because it's growth stocks, what really going to drive the price is how fast the company can end up growing. So I just wanted to end up stating so you exactly know what is growth stocks. Alright, so next let's cover, before you invest in growth stocks, I think it's very important to know what drives growth stocks. And as much as I want to make it super complicated and have a lot of things to tell you, it really just boils down to one simple thing: how the company's ability to grow its revenue. So if it's a newer company, say in its earlier stages, it's revenue growth. If it's a little bit more established, then it's earnings growth. But at the end of the day, those are the two things that matter. What's the revenue projected growth, how fast it's going to grow, and can it deliver? So those are the main things. And let me just give you an example. So a lot of times with companies, especially like growth stocks or growth companies, a lot of them, especially nowadays in the tech field, they're not going to be profitable. So these financial metrics that was in what you consider the traditional P/E ratios, earnings per share, and all that stuff. But you can't really validate it in this particular way, because a lot of these companies, they're not profitable yet, but they have huge potential and upside. So the only real way to evaluate in present day time is based off of the projected growth rate. So if the company is projected to grow 30 to 35% each year for the next 5 or 10 years, that's why they're having such a high validation. That's why the price of the stock is so high. So the thing about it, when you're looking at these, you want to know, the revenue growth. So if they're projecting it to grow 30 to 40%, do you think it can grow that much? If so, it'd probably be a good investment. But just know with these growth stocks, projections can easily change. So that's why when you're dealing with growth stocks, there's a lot of volatility. Because if you're a more established company, in one earnings or projection and stuff, it's not that big of a deal. But it becomes a big of a deal when all the emphasis is focused on revenue growth and you're not meeting those quarterly, you're not meeting those. That's going to you're going to see the stock price end up taking a decline, especially because with companies that are not profitable, revenue growth is everything. So you can miss earnings here, miss earnings there, but at the end of the day, the revenue growth, if the revenue growth deliver, then yeah, the stock price and all that stuff will be great. But if not, then that's when you're going to have problems. That's why when you're talking about investing in growth stock, I would at least say you want to have a 5-year time span. Speaking of, I didn't actually bring it up, but some growth stocks that people may know of, FANG stocks, Amazon, Teslas, and Facebook. Now they got into a little bit of mature stages, but when you think of growth stocks, a lot of times people think of tech stocks because a lot of tech is innovation and stuff like that. It doesn't necessarily have to be the case, but yeah, that's the case. And I also wanted to tell you, with the growth stock, high risk, high reward, because a lot of the things with growth stocks, it can't really be predictable. So it takes a leap of faith, as well as doing a lot of research about the sector, about the particular company, to see if they can deliver, the management, all of those things that play an important role in it. And also I wanted to let you know with these growth stocks, it's not just, sometimes with these growth stocks, it kind of takes time. Like look at Tesla. If you look at Tesla for about 6 or 7 years, the price was kind of within the 200 to 300 range, and then boom, rapidly, it just goes from this point. All you need is 1, 2, 3 major things to happen, and the stock price goes up, similar to Amazon. So I like to say with these growth stocks, sometimes you really got to give it a couple times, and you want to have a much longer time horizon because there's a lot of unexpected things that can end up happening. Okay, so let's go over some characteristics that I think that's important that you should look for, or some of the things that you can look for. First things first is the revenue growth rate, because we know that, well, like I said, for companies that's not profitable, you're looking at revenue growth rate. A lot of times in this particular day and age with the newer companies, we're looking at revenue growth rate. So ideally it works that, okay, as long as you can grow revenue, you can grow revenue. Eventually, later on down the road, we'll worry about that, turning to bigger earnings growth. But as of now, as long as you can grow revenue, that means that you're tapping into more clients, there's more opportunities in the future. And that's a lot of times what people are worried about. Well, a lot of growth investors are worried about in the present time. Later on, the other financials, and as it transition into more of established, then it'll actually matter more. But a lot of times for growth stocks, it really depends on how much they can grow in earnings and how fast. Same thing. Revenue, remember, sales, earnings is like after all that other stuff. But so those are like the key things. Another thing that you may want to end up looking for is, this is my personal opinion, the CEO's vision. You want a management that can give a clear insight of where the company is going. Whenever you have a CEO that has a lot, that's very influential and that can really encourage customers, investors, and all that stuff to keep them engaged and keep them excited about the stock, it can really help the company grow. Because sometimes, things take a little bit more time, and sometimes you just need people engaged and give it time to meet those expectations. So the next thing you should be able to look at is market opportunity. You want to invest in companies that's targeting markets that's growing rapidly. So that way, if the market is growing rapidly, it allows their revenue and earnings to do the same thing. So you also want to tap into a market that's constantly growing, so the company can grow with the market. And as long as the market is growing, the company can grow exponentially, theoretically. So those are the things that you particularly want to look at. Another thing you want to look at, the companies needs to grow at scale. Sometimes things work pretty good on a local level, but then when you try to expand it, especially nationwide and stuff, worldwide and stuff, sometimes it's a problem. Sometimes it's hard for a profitability to be at scale. So some things that they work on a smaller scale, but once you get onto a major scale, it becomes problematic and unsustainable. Another thing is competitive advantage. So what separates them from every other company? That kind of stuff is really good for longevity, because if someone can easily mirror or easy copy, it's probably not going to last that long. So what they call first movers, the person had the ability to do it first. A lot of times when you think of, I'll give you an example, electric vehicles, you automatically think Tesla. So now that there were a lot of other ones out there, but they were kind of the first one to do it and put a lot of emphasis on it. So same thing with like online shopping. Online shopping, a lot of times people think of Amazon. So that mass production, it's those things like that you want to look for. The next thing I think you want to look at is customer appeal. Do the audience like the products? Do they like the service? What are feedback you're getting from them? Do they feel like these companies are addressing problems, or they're meeting demands? So that is kind of really important, because that definitely, sometimes the optimism and the belief can really carry the stock price a long way, especially if it had a lot of volatility and stuff like that. These are some things that you particularly want to look for. Also, next you want to also look at and pay attention to is customer acquisitions, meaning, is the company getting new customers? A lot of times you see with the Netflix and stuff, a lot of times they're focusing on, okay, how many subscribers are they getting? Is it increasing? What's the rate that it's increasing? So these are things that you really want to pay attention to. Also, you want to look at companies who can grow regardless of the market cycle. Sometimes when you have companies that, as long as the economy is doing really well, they do fine, and then other times when you have the market slow down, the company slow down as well. Another thing you want to look for is the people who initially start the company. What kind of stake do they have in the business? Because a lot of times I like to see people that end up actually founding the company owning stake in it, because it kind of shows that, hey, we still have interest, we have stake in this, so we would like this company to have a future. So whenever I don't see founders, investing in the business, it's just not something it's not necessarily saying mean that it's bad, but it's something that I would like to see. And also, I definitely want to mention this, and a lot of times I mentioned in this video about revenue growth, the rate at which it can grow. So not only is it about revenue growth, but it's about consistent revenue growth over a longer period of time. So it's one thing to produce, okay, 200, 300 this quarter or next quarter, and then you kind of go down to 10 or 5 or break even. So a lot of times when I'm talking about revenue or earnings growth, we're talking about double digits, 20, 30, 40, consistently, because that's the key. Because whenever you want rapid growth, you want it to happen consistently, because as soon as the growth stops, then it's kind of like a problem. So you can't go up 400% and then the next thing it's growing at 10, and then it fluctuates. You need that consistent high growth. Also, I definitely want to mention that, financials and stuff, I didn't put a lot of emphasis on it, because with growth stocks, a lot of times the financials aren't going to be as good as your well-established companies. But I will say this, it is important for you to, I think, if you're going to look at the financials with growth stock, the main thing I would be paying attention to, I'll be paying attention to cash flow. Free cash flow, operating cash flow. So this is pretty much telling you, okay, how much money is coming in, how much money is going out. So these are the things that, maybe not all the other stuff, but the free cash flow statements to me says a lot. Because a lot of times you'll have companies that's not profitable, but they have positive cash flow, meaning more money coming in than more money going out. So those are the things those are indicators. So as long as you see positive cash flow, or if they go into positive cash flow, even if the company's not profitable, that means you're on a good track. Also, as far as how well the company end up leveraging debt, what are their ability to raise capital? When they raise capital, what are the expectations once they end up raising money? Okay, how much did the growth improve? Do they need to have debt just cover day-to-day basis, like with the operating cash flow? Those are things that I think that is really important. But that concludes the Dow Stock Talk. Make sure you let me know in the comments below, what do you think? And also, if you haven't already, make sure you hit the like button. And if you're new, make sure you subscribe to my channel. Also, let me know in the comments below, are you a growth investor, or are you a value investor, dividend investor? Make sure you let me know in the comments below.